After a historic rally, cocoa prices have dropped by half in 2025, a dramatic turnaround that is reshaping the confectionery industry. Meanwhile, coffee remains resilient. But for how long? Could coffee be facing a similar fate? Or will its market structure make it more resistant to the kind of collapse we have seen in cocoa? I'm glad to welcome back Lucca Bezzon, and StoneX Brazil market intelligence analyst and specialist in cocoa market, and a coffee specialist, Fernando Maximiliano, market intelligence manager. Thank you for joining me, Fernando and Lucca. So cocoa prices have halved. Is coffee facing the same fate? So maybe first, Lucca, you could tell us why the drop in cocoa prices is happening.
Perfect. Thank you, Fiona. Specifically for the cocoa sector, the falling prices that we see during 2025 is mainly linked to the expectation that the market has that the 25-26 harvest, which starts now in October, will be one of surplus. We'll have during this harvest a supply that will overcome the demand, and we'll have a recovery, a certain recovery in the stocks level, which we haven't seen in a bigger, such a big level, at least for the last five to four harvests. So it is very bearish for prices that will have a surplus during this season. This surplus, in turn, is mainly linked to a substitution and demand contraction for cocoa, especially in the confectionery industry. We've seen lots of news regarding the substitution of cocoa for other fats, for other products that compose these products, which, as an effect, diminishes the processing and grinding activity for the grinding companies, which are the ones that take the cocoa beans and transform them into subproducts that will later be used by these confectionery industries, which have in turn recovered prices. It had an opposite effect of what happened in 2024. So we've seen that cocoa prices diminished a lot. It was an irregular decline, but was one that made cocoa prices fall around 50% during this year.
So, Fernando, can we expect the same for coffee?
Well, it all comes to the fundamentals. So we have to look at the supply and demand balance sheet. And when we look at cocoa, as Lucca just mentioned, there is a better outlook in terms of supply, but not because of big recovery in the production, but because demand was being destroyed. There were being a substitute for the cocoa market. But for coffee, it is a little bit different. There is no way to substitute coffee for another product. Coffee has to be coffee. So the only thing we can do is to shift over between Arabica and Robusta, but it still has to be coffee. So that's one thing. Another important thing is coffee it doesn't have the elasticity, price elasticity as cocoa have, as cocoa products have, because of the structure of the market, because coffee, for example, is well linked to the habits, is well linked to the culture of some people and regions and countries. So this consumption changes. It's not that volatile as we see for cocoa. So for that reason, we are seeing demand being destroyed. We are seeing lower consumption, but still the change is not that big to be able to drive prices as it did for cocoa.
So, Fernando, what are the main bearish risks for coffee at this stage then?
Well, for coffee right now, we saw prices rising in August. We saw prices rising in October again. One of the things is the tariffs. So the tariffs on Brazil was bullish. I'm sorry, to the market because it creates a problem for the American market. It's the largest consumer worldwide, and Brazil is the largest supply to the United States. Recently, we saw an escalation in the relationship between Colombia and in the United States as well. So in case the US place tariffs on Colombia, that's another bullish factor that market reacted because Colombia represents 20% of all US imports. So Brazil is 35%. So those are very important things. And if we see, for example, for Brazil, the tariffs being taken off of Brazil, that would be bearish to the market. Also, another thing bearish to the market is the crop in 2026, and it all depends on the weather. But if we see good development and an outlook of a larger supply in 2026, that will create an optimism regarding the supply, and that would act as bearish as well. Of course, slowing demand is something that is bearish to the market, but as I said, it is not, the change is not creating a driving the market, and the variation comes from the supply side.
Could we see cross-commodity effects where cocoa's fall influences coffee sentiment? What do you think, Lucca?
For that question, maybe in the short term, there could be a limited impact, especially considering the speculative agents, which may be inclined to rebalance their investments between softs, which include coffee, cocoa, sugar, and other soft commodities. But overall, at least in my opinion, in the long term, since the markets have different dynamics and different price drivers, there shouldn't be a direct link between the two commodities.
And Fernando, what's your take here?
Yes, I totally agree with Lucca. Those commodities are soft commodities, so there are some links to the markets, but in the long run, what plays out is the fundamentals. So it's the supply and demand, is how the production will recover or not, and how demand will be impacted or not. So those fundamentals are key and crucial, and will have the largest weight on the coffee market and the cocoa market, I believe, as well.
Finally, looking forward to 2026, what will determine the direction of both markets? Lucca?
Well, for cocoa specifically, to simplify it, market participants are really looking forward for the West African, specifically supply recovery. That comes with weather recovery as well. If we have weather that is good for the development of cocoa beans, and if we continue to see investments in these countries, we may see in the short term a recovery in prices. If not, in the long term, it is quite consensus that we'll have an increase in secondary countries such as Ecuador, Brazil, other African countries as well. So on the supply side, for the next few months at least, we'll see how the West African crop will develop. Another important trend that will follow is the grindings one. We have quarterly releases for the grinding processors and their activities. So that's one data that it's quite crucial for the cocoa sector as well. If the decrease in grindings will continue, or if it will normalize and then come back to normal.
And Fernando, for coffee?
Well, the main question was that we saw cocoa prices fall in half of its price in 2024, and is coffee going to follow the same trend? We believe that coffee could be under pressure, but not for the same reasons. As we saw for the cocoa market, demand was a key driver creating the new trend in the prices. For coffee, the changes comes from the supply side more, and the demand doesn't have these very strong directional drives. It cannot be a drive like that. because of the structural changes as differences as we mentioned throughout those episodes. So we have that the coffee cannot be substituted with something else. Coffee has to be coffee. We can only change between Arabic and Robusta, and it is not as elastic as cocoa. So those things show that demand, lower demand, will not have the weight that it had for the cocoa market. But coffee could be under pressure if we see the tariffs being taken off of Brazil, and if we see a big crop in 2026. That is the key. The two key things is the tariffs and the production in Brazil. Now we have our team in the field doing the crop survey right after the flowering, and we will publish our first estimate for the 2026 crop in November. So I would call everybody to follow us. And if we see a big number there, a great supply, we would see it under pressure. But otherwise, we could see prices on the rise. And also we have to keep in mind, we are under La Nina effects. La Nina could create the risk of flash droughts, and that's a weather risk for the production in Brazil. And as we have mentioned before, another important thing is that we are seeing an increase in the extreme events, and those events could disrupt production again. And well, we already know where it can go.
So as we've heard, cocoa's decline and coffee's resilience reflect not just price cycles, but deeper structural differences in demand, substitution and policy. Cocoa faces reformulation and substitution, coffee does not. And whilst both remain exposed to weather, trade and geopolitical risks, their path ahead may be very different. Thank you for joining us for this three-part series with StoneX Brazil market intelligence analysts Fernando Maximiliano and Lucca Bezzon. For continuous updates and fresh market insights, visit stonex.com/intelligence and stay tuned for more analysis from the StoneX team.